Tips and tricks for trading Andrews Pitchfork Tools. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. The title of the video is Tips and Tricks for Trading Andrews Pitchfork Tool. Alright, in this tutorial, I want to share with traders a specific and effective way one can use the Pitchfork tool. Alright, so the first thing we need to understand that when we apply in any trading tool like the Andrews Pitchfork tool, we must not use the tool in isolation to the market pattern. So we should not use any trading tool by violating the three market pattern. So talking about the tips and tricks for trading Andrews Pitchfork tool, we want to combine the Pitchfork tool. We want to build a trading strategy with the Pitchfork tool without violating the three market patterns. So we have the horizontal market pattern, the rising market pattern, and the declining market pattern. But for this tutorial, I want to use only one market pattern, the consolidation market pattern or the balanced market pattern, all right? Okay? Or the accumulation market pattern, okay? So what are we looking for? Okay, we don't want the video to be too long, so we are looking for a consolidation phase, a consolidation period, when the price is consolidating between the two levels. So I have already highlighted two levels here. You see that the price was oscillating, between these two levels. This is what we call a consolidation, a low volatility period, or a balanced market, or the horizontal market pattern. So once we see that, we wait, if the price breaks out of the consolidation, all right, and pull back. So the first thing we are looking for, consolidation. Look on your chart. This strategy is valid on any time frame, all right? So these are just few tips and tricks that we can apply to improve our Pitchfork tool trading. So first step, we are looking for a consolidation phase. Then we see the price running out of the consolidation phase. All right. So this is a runaway from the bottom here all the way up here. This is the price action that came out of the consolidation. Then we want a pullback. We don't want the pullback to be 100% Fibonacci retracement. We want it to be less than 100% Fibonacci retracement. All right. The pullback. So you see now, consolidation, price out of the consolidation. So this is the price action that came out of the consolidation, and then we are waiting for a pullback. Now the third step is that the price must start going up. So it start going up like this. So consolidation, breakout, pullback, and start going up. Now we have 3 points. It's the first point here, second point, and the third point here. Now we apply the Pitchfork tool. Now I'm going to say something very important now, and I want you to pay attention carefully. First, I will ask the question, what is the ultimate role of the Pitchfork tool? Think of it for a second. What is the ultimate role of the Pitchfork tool? All right. If you didn't get it right, let me tell you now. The ultimate role of the Pitchfork tool is to determine, the possible path of the price. Take it from me, all right? If you have never heard about this before, think of it for a second, try to digest it, so to speak. The ultimate role of the Pitchfork tool is determine the possible path of the price action. So you see here the price came out of the consolidation phase, ran out, pull back. Where is the price is likely to go? All right, what is the possible path the price is likely to take? After a breakout pullback, what is the possible direction? What is the possible route? What is the possible path the price is likely to take? And the pitchfork tool, the ultimate role of the pitchfork tool is to determine the path of the price action, the possible path of the price action. With these 3 points, we have drawn our pitchfork tool. Now, so we know we are here. So we are here, the price going up. So we were here, okay? So up to this point, we have drawn our pitchfork tool already. And the pitchfork tool is telling us at this point in time already that if the trend will remain in place, if the trend will continue, the possible path that the price is likely to take is within, okay, the boundaries of the pitchfork tool. So, on the other hand, if the price is out of the pitchfork tool, it's telling us that the current trend that has begun is likely to stop. All right? So, remember what I'm saying clearly here, because I don't want you to get it wrong. All right? I want you to get what I'm trying to communicate to you so you don't misunderstand what I'm trying to say here. The ultimate role of the pitchfork tool is to determine the possible path of the price action. So we see a consolidation, which is also accumulation period, the time when the smart money will buy or sell. If they are buying, we say accumulation. If they are selling, we say distribution. So here they are buying. Price is out and pull back without pulling back all the way down. So that's what I meant by not 100% Fibonacci transferable. Now we want the price to start going up, resuming the prior trend. This was the prior trend before the pullback. Now it resumed the prior trend, start going up. Now we can choose our 3.1, 2, 3. We place our pitchfork tool. The pitchfork tool at this point in time already is telling us something very important, that if that trend will continue, there's a high chance the price will stay within the boundary of the pitchfork tool. So if we want to buy, because this is an uptrend, we are better off buying somewhere along the edge of the lower part of the rising pitchfork tool. All right? Now, we don't want the video to be too long, my friend. I got few minutes left. Let's continue and finish this very fast. So once we have highlighted the pitchfork tool, we can now pay attention to the price action on the edge of the pitchfork tool. Another thing I need to mention very fast, if the trend is strong and the price, okay, if the trend is very strong, the price will come out of the pitchfork tool on the other side, above it. If it's a rising pitchfork tool and the trend is very strong, the price will go, we can even go above the pitchfork tool. On the other hand, if it's a bearish pitchfork tool, if you were in a downtrend, I'm going to show you that in a minute, all right, and the trend is very strong, the price will come out of the pitchfork tool and will go below the pitchfork tool. But in normal trend, in normal condition, the possible direction of the price, the possible route that the price may take, so to speak, is within the boundary of the pitchfork tool. So we want to buy or sell. If the trend is dynamic, is normal, we are better off buying within the boundary of the pitchfork tool. It makes sense? So you see here, price pull back on the edge of the pitchfork tool here. It didn't find a support, but you can see quickly as the price did not stay inside the boundary, but it's out. So here you see that the price went horizontal and came out of the pitchfork tool. What is he telling us? He's telling us that the trend that has begun is likely to stop or to slow down. So to stop means that a reversal, to slow down means consolidation. In this case, the trend did not stop, but we see what we call, okay, a consolidation. Are you with me? So here we have first consolidation. Did you see? The first tips, consolidation, breakout, and a pullback. Look, my friend, Here it is again. It's consistent, okay? Here it is again. Look carefully. Let me remove the previous line so you don't get confused. What do we see here? Another consolidation. Get it right, okay? Consolidation, we are looking for. Here the price is consolidating again. On our weekly chart, we can apply this strategy on any time frame. And what are we looking for? We want the price to come out of it, to bring it. You see, that's the here one. Came out, it bring it out. This is the leg that bring it out. This is the price action. You remember? So we do exactly the same thing. That's what I'm going to color now into red. So you stay focused. Here it is, it's out. We want it to pull back, but we don't want it to pull back all the way to the beginning. So this is the pullback here. And we want the third step, try to go up, to resume. So it's a prior trend. It went out of the consolidation, pull back, and start going up. Now that it start going up, she's out of the channel. So we want it to come out of it. Here it's inside the channel. We want it to come out. As we see that, now we start applying again the pitchfork tool to, okay, the prior. So first point, second point, and a third point. Right there. Are you with me? So here again we see a consolidation, price out and pull back without canceling the previous move. Here the pitchfork tool is telling us that if the trend that is beginning now after this consolidation is to continue, the normal route or the normal path that the price may take is within the boundary of the pitchfork tool. So on a weekly chart or on a daily chart or any higher time frame, we are looking for trading setup along the edge of the pitchfork tool. If the bullish trend is strong, the price may go above the pitchfork tool or ride the upper side of the pitchfork tool. Remember, I don't want the video to be too long, and I'm moving on very swiftly. All right, here it is. So here we are looking. So we see here possible the price has a high chance to stay within the channel if the trend is normal. Okay, so if it pull back to the edge like this is a trading setup for us. We use a top-down trading method to trade it. Here again, display high and high, pull back again on the edge. Now we want this candle to close inside. Right here, we will look for an opportunity to buy. We're using a top-down trading method. Now we see that the price is out of the pitchfork tool and it's trying to go back inside. It's stuck. You see, this is beautiful because now we know that the normal route that the price may take, the normal path, is within the boundary of the pitchfork tool, or if the trend is strong, it should go above it. All right, now it's out. So what should come into our mind straight away? It should come to our mind straight away that the trend may change or may slow down. It's two things. Doesn't mean that the trend has changed, but the trend may slow down. Remember, the trend to slow down means that we are likely to see another consolidation. Here we are. You see, we have another consolidation. The price is out of the pitchfork tool, which is the normal path of the path. That's consolidation or reversal. So we see again. Are you getting it now? Okay, it makes sense. Here we have again a consolidation. This is about the tips and tricks for trading under your pitchfork tool. All right, this strategy is based on the ultimate role of the pitchfork tool. Here again we see the price is out of the pitchfork tool. Now you're getting it now, okay? It's making more sense now. Here you see, break it out of the consolidation, and we want a pullback. No, 100% pullback. You can see that if you agree with me, the price pull back a bit here and start going up, but not much. It's stuck. Okay? So what will go through your mind there? You see here? See, it's too shallow. We won't pay any attention to this. We know that either we may see the prolongation of the consolidation, which means the extension of the consolidation, or we may see a reversal. Because the price did not pull back here. You see, in fact, we can say that there was 100% pullback. The price pulled back all the way to the beginning of this move here. So we know that it's going to go down. All right? Shouldn't do that. If the trend is likely to continue, it should come all the way here. It makes sense? Now, let me show you for a downtrend before I wrap it up. I'm going over my time now. Okay, my apology to traders because I want this video to be very, very short. Here we are. Price start going down. What are we looking for first? Are you getting it now? We are looking for what? A consolidation. But here, you see, we used this consolidation before. Some new trader may find it a bit tricky now. So we used this consolidation before, but the price cancel it. Which means what? Which means we have not used this one. In this one, we have used it because the price went out and pullback did not cancel the prior move. But this one, though the price went out, it came back and canceled it. If you see that, consider that consolidation as not yet used. So we have not yet used this one. All right, it makes sense? Is it making sense now? Because the price did not give us any opportunity to trade it here. So we consider it. So here we are. Price came out of this channel now. It's going down. Easy. You see? Now it pulled back a bit. Now we have again 3 points. Yes or no? Where are they? So this one. Okay. And this one here. And the third one here. And the price start going down. Now we can apply again our pitchfork tool, this time, okay, in a downtrend, to determine the possible path, the possible routes that the price is likely to take. If the bearish trend is very strong, the price is likely to go on the lower part of the pitchfork tool. But here, something very interesting has happened. As the price, okay, you see here, the normal route, the normal path for this downtrend should be within the boundary of the pitchfork tool. Now, if the price came out on the other side, which is above it, it's telling us that we are likely to see, okay, a pause. The trend may slow down, which means consolidation, or a reversal. So here, as the price, you can see, we draw a pitchfork tool, the price came quickly out of the pitchfork tool. So we are thinking that, okay, the trend is slowing down, or the trend may change. Here we see that the consolidation has taken place. But look, after the consolidation, the price went down. This is a reversal here. It makes sense? Now and again, we have a new consolidation again, and we can apply again the same tips and tricks that I show you now. Consolidation, price went down, 1, 2, 3. Are you getting it now? So here, we have a consolidation, price is out. Now it rally out, we have the third point here, and it start going down. This is where we are now. It start going down, it must start going down before we can apply again the same strategy using the pitchfork tool. My friend, the ultimate role of the pitchfork tool is to determine the possible path of a trend. Here it is. It's telling us now that if this downtrend, the normal downtrend should continue, the price will remain within the boundary of the pitchfork tool. If the price out of the pitchfork tool, it means two things. Either the current trend is slowing down, which is what? A consolidation may take place, or a reversal may take place. If the price goes below the declining pitchfork tool, it's telling that the trend is becoming very, very strong. These are few tips and tricks that we can use for trading the Andrews Pitchfork Tool. If you want to learn more about Pitchfork Tool, Andrews Pitchfork Tool trading, subscribe to Day Pro Traders YouTube channel, and also visit www.dayprotrader.com. Click on Pitchfork Tool Trading and also on Andrews Pitchfork Tool Trading. If you like this video, please give us the thumbs up. If you truly dislike it, give us the thumbs down. But if you love it, feel free to share it on Google+, on Twitter, on Facebook, on the social website. All right? Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about tips and tricks for trading Andrews Pitchfork Tool.